Hey everyone, today I'm going to introduce you a good way to make profit when the market crashes and a good stock to buy in this type of volatile market. It's really tough to invest in the current market. You have no idea where it has to. Lots of stocks are doing this. Open up high and dive 10% in the middle of the day. Get back a few percent in the last hour. Definitely not the market for guys who don't want to stare at it all day long. Sadly, with factors like stimulus package, election, COVID coming back, vaccine, US-China's relationship, etc., the one-sided market is going to be rare in the future. You can't just stay in the comfortable zone, counting money you made the last 6 months. You need to learn how to make money in a volatile market like this. So, what are some good ways to make money when market is going up and down crazy like this? I might mention buy the dip, sell the rip in the last video. However, this is only a strategy. Nobody can time the market perfectly, especially for a short period of time. Therefore, you shouldn't put lots of money to gamble. Even with today's high return, low risk method, you need to do some thinking and plan your money wisely. Okay, let's get down to the meat today. How do you make high returns with low risks in a volatile market? One good way is by selling naked put option. Don't quit yet. Someone may say option is like playing with fire and you're telling me to go naked? Hold on a second. First of all, playing fire naked is better than having improper clothes on most of the time. In case the clothes start burning and sticks onto your skin, which makes it harder to remove. You won't be burned as severely. Just joking. Using this option is not telling you to short the market, which, as I said before, is a one-way ticket to hell. There is something called a volatility index. Usually, the more volatile the market is, the higher this index goes. The number is calculated by option price. Therefore, the higher the market volatility is, the higher the option price gets. When the VIX is above 20, we're in a fairly volatile market. This is a good time to sell put option. There are many put option selling strategies. Today, I will introduce the easiest one to perform when the market crashes, which is sell deep out of the money put. I will use a recent example to show you what's the logic behind. From August 31st to September 8th, Tesla went from $502 to $329. On Tuesday, September 8th, it went down 21%. The major reason for it to dive down so much is that it was passed over for inclusion in the S&P 500 index. No other news. The market was just panicking. I chose 260 as the strike price, which is 20% lower than the price at that moment. Sold one put option expiring on September 25th. This would normally worth only a few cents, but on that day, it shot up to over $8. I gained $800. And of course, didn't have to exercise the option. A few important things to keep in mind when you adopt this strategy. First of all, the crash can't be due to fundamentals. Say this time the crash was a different reason, like Tesla faked its financial report. That's a totally different story. A 90% dive is possible for that kind of issue. In other words, the company needs to be safe. So, even if Tesla had crashed again in the past 2 weeks and got lower than 260, the option was exercised, I have no problem holding Tesla at 260, still a fairly decent price. Second, deep out of money means choose a strike price far away from the current price. The farther I set this, the less likely I'll be forced to buy this stock later. Tesla crashed 20% already on that day, and I set my strike price another 20% lower. So, very little chance for me to be forced to exercise the option. I don't mind purchasing the stock at that price, but taking the premium and letting the option expire is always the first choice. Third, it better be a short-term option. Nobody can guarantee a company's future. For instance, we know Apple is a great company. But if US ban TikTok and WeChat, will China retaliate by punishing Apple? This has definitely not been priced in. We don't know whether this will come true in a few months, but we know very unlikely in the next couple of weeks. Thus, when you are selling an option, always try to minimize that risk. Ideally, 2 to 6 weeks when I'm selling my option. Some people might ask, it's still too risky for me. Is there a good stock that I can buy in the next couple of months? Well, is there a company that has good fundamentals? Even better if it pays good dividend? Has some room for recovery or growth? Last but not least, be able to handle major risk coming in the next few months? The company I have for you today is Caterpillar, ticker symbol CAT, CAT. In 1925, the Hod Manufacturing Company and CL Best Tractor Company merged to form the Caterpillar Tractor Company. It's almost 100 years old. Starting with most of its focus on engine, it slowly expanded its business to 28 industries, including energy, construction, mining, etc. Due to the great quality of their product, the company won lots of orders from the government in World War II. Their product performed great no matter in Normandy or in the coming up Korean War. Right now, they are number one machinery producer globally. During the pandemic, they suffered severely. Lots of projects got cancelled or temporarily suspended. Their Q2 revenue went down over 31%. Why is this the stock to buy the next few months? We know that economy recovery and easy money favors manufacturing industry. Here is the CAT stock versus ISM manufacturing index chart for the last 20 years. We can see they're positively related. This year's manufacturing is ruined for sure, but the need isn't gone. It's just pushed later. Therefore, year 2021 is going to be a great year for manufacturing industry. With this year's pandemic, CAT is like a compressed spring. Second, it is a real recovery stock. What do I mean by real? When you mention other recovery stocks like traveling, airlines, cruises, they're going to recover. But are people going to travel, fly, or take cruise twice as much next year to compensate for this year? No. Lots of people get from their boss, you guys better use vacation all up this year, no carryover. However, with CAT, it's different. Most projects that are temporarily suspended will be picked up once the situation gets better and bring the revenue back. And third, CAT can resist the uncertainty brought by the coming up election. Here's a list of industry that's going to benefit or get hurt from the election result. If Republicans won the White House and Senate, the communication, energy, small cap, military, and infrastructure industry will benefit from it. Retail and high tech will probably suffer from it. If Democrats won both, then environmental, weed, infrastructure are going to be favored. High tech, energy, restaurants, and small caps are going to get hurt. The only one that's going to benefit no matter who won the election is infrastructure. Thus, CAT doesn't face this uncertainty like other stocks. However, there is one common promise that both parties made: investing big in infrastructure. It is very effective in dragging a country out of mud hole or boosting economy fast. Roosevelt brought up large-scale infrastructure projects to save the country from the Great Depression. China invested big in its infrastructure, which partially led to their achievements today. Even Middle East decided that they cannot rely on oil and gas by itself and started investing more in its infrastructure. Thus, this is definitely a smart choice for both parties. Lately, CAT has been focusing on increasing revenue more and more from their service rather than product itself, like providing device management for their customers, counseling, etc. They plan to increase their service revenue and make it to 50% of the total revenue by 2026. And fifth, it offers a 2.7% dividend. The dividend never stopped in the last 87 years. Not as attractive as some of the stocks I mentioned in previous videos, like SPG. However, considering the resistance to uncertainty, it's definitely worth it. Last, financially, it is very healthy. Latest financial report indicate that it has 8.8 billion cash or cash equivalents, highest of the last few years. And the short-term liability, in the meantime, is the lowest of the last few years. Don't get too excited. Every stock is associated with some sort of risk. Risks for CAT include 1. Stock price took a pretty good bounce back to where it was before COVID, so less room for imagination. Second, the technology is changing fast. A new technique in automation can really disrupt the industry. If that happened, they may no longer be the leader of the industry. A good thing to see they started preparing for it. They just bought a company called Marble Robot, an automation company. It's a small step, but could prove to be big in the future. Third, some of its major clients are from energy and construction industry. Lots of them are in the concern of bankruptcy. If losing too many clients, it may create cash flow problem for Caterpillar. All right, today I told you a good stock that you can purchase in the next few months and an option strategy to use when the market crashes suddenly. Hope you get something from it. Thank you for watching.